Hey there, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. We have an exciting day coming up today, certainly a continuation of this exciting week. We are definitively now within the bullish phase of one of these volatility cycles we've been talking about. So bullish volatility on the horizon. This certainly projects a decent sized price up over the next 4 to 6 weeks. We're going to cover some of the criteria that I look at on a regular basis that I talk to several others about, how we can recognize one of these volatility cycles on GameStop when these arrive, and certainly what they mean for our price action and for forecasting what that price action will look, and of course for the company as well going forward. So that's what we're going to focus on today. So let's hop right into it. Let's take a look first at some of our gratitude. Always start with our gratitude. First up, thanks go out to Kurt Lusko, who has taken the liberty to sponsor all of the videos and articles for this week. Thank you very much, Kurt Lusko, aka Short Fridays. Always an enthusiastic contributor at our weekly live streams every Friday at 4 p.m. Eastern time, as well as to our monthly contributors, Dat Screfto, Ken Wedmerland, and Not Medical Advice, who generously pledged to support some of my data expenses, offset some of my data expenses on a regular basis. Thank you very much. And thank you very much, of course, to everyone who has contributed and will contribute in the future. So let's take a look at what we're looking at today. First off, right, I always like to start with a little bit of tin. The tin is always fun. Right, we get a little signal. Of course, there is an open theory. I certainly think this is sort of my leading expectation that this is the case, is that we have this single mystery share buyer right when after hours, I should say right when overnight exto period begins, directly at 8 p.m. Eastern time. We've been getting a lot of these single share buying episodes with numbers that seem symbolic, right? Certainly for GameStop as a whole. Seems to be someone who is plugged into this, who also has computer coding skill, right? The Ultimator 5 has been able to discern that basically the only way that someone can get this to consistently happen is to have it hard-coded in, have this order hard-coded in that pops up, is able to get in before the Blue Ocean overnight exchange can get their order book loaded. So very interesting to see this. It does seem that based on the changes in the symbolic numbers that this order is characterized by, that are displayed in the price, it seems to be that whoever is making these is suggesting potentially a change of direction. So, for example, we saw all throughout this down phase in let's see, beginning middle of January, so January, February into March, right? We saw maybe about 15 orders that all ended with 69, and then just before we started moving up for earnings, we saw a 96 instead of a 69 in the cents column, and we also saw a countdown right on the Rainbow Road tweet day, which was, or I should say, what looked reminiscent of the Rainbow Road tweet day, which was 4321. So 24, right? It was 20. The price was 2321. That's what it was. So 2321, right? So countdown. And now what do we have here? We have 2469, or I should say 2496, which of course backwards is 69. 420. Yeah, so interesting. Does suggest perhaps that when the numbers go backwards, you have to go back to go forward. That this suggests, well, we have an up move on the horizon. That certainly seems to be the case, looking at a number of the factors that tell me, right, that should tell us, yes, we are moving into the upward portion or the volatility portion of one of these GME liquidity and volatility cycles, right? So the up cycle is characterized by high volatility, and with GameStop price action to the upside in some dynamic fashions, looking a lot like what we saw back in November or last end of April into May and June. So there are these periods, right? GME goes through these cyclical periods where there is either a high degree of volatility is going up, and short liquidity, therefore, is going down, or short liquidity is going up or is at high levels, and therefore price and volatility are going down. So from about the middle of January, just up until about the middle of March, we had a significant liquidity cycle. So the liquidity phase, short liquidity going up, price going down, right? So lots of shares being created through ETFs, very clear FTDs, heavy shorting, price being transposed down. And it certainly seemed that this liquidity cycle was targeting these very large GameStop swap rolls in March. So in mid-March, between the 11th of March and the 28th and 31st of March, which just so happened to line up at the tail end with GameStop earnings. We had a very brief volatility interlude, and then things got shorted back down until the 31st swap roll. And we've been more or less moving back to the upside since then, with our numbers reflecting that change in phase. So I want to walk through some of those criteria in my article today, which of course you can find on my X page. It is linked down at the bottom of this YouTube video. Right, I want to walk through some of these criteria. So, of course, in this cycle, what characterizes the volatility phase? So, obviously, we've talked before and talked in the midst of this previous phase what the liquidity phase looks like, but what does the volatility phase look like here? So, okay, on the one hand, we have options volatility. That is implied volatility, options pricing. This is being priced into options. So we see IV levels, especially 30-day forward-looking and 10-day mean IV30 levels reflecting elevated values. So, for example, we saw IV get down to these very low levels, largely oscillating between kind of the mid-60s in terms of a composite percentage, and moving up basically only about as high as the sort of lower 80s, upper 70s in this period leading up to earnings. So sort of late February into earnings, which would have been lower had earnings, of course, not been taking place at the end of March. So even we had that kind of background effect of earnings, elevating our IV, and it was still that low. So elevated options volatility, increased daily trading volume. So our daily average trading volume is a little over 8.5 million shares. When we see these low volatility periods, right, we see these days pop up with 3 million or 2 million or 4 million, with very low daily trading volumes that are about half or maybe even a quarter, half, a third, a quarter of our average volume, right? When we're looking at the volatility periods, we're looking at 2x, 3x, 4x daily volume. On otherwise days, we don't have news or anything important, right? So obviously the earnings, convertible bond arbitrage thing we saw a couple weeks ago, these are exceptional catalysts. These are exceptional events. These are related to company news. These somewhat fall outside how we're making calculations or how we're estimating volatility cycles, although they themselves can be periods or usually are days of increased volatility. So, but what about these bigger, broader cycles that take 3 months, right? That have 4 to 6 week volatility phases followed by liquidity phases, right? So we're looking at basically unassuming days, unassuming trading days. We don't have catalysts, we don't have company news, but we do see that 2, 3, 4 times multiple in our daily trading volumes, as well as something similar in our total spent options premium on a daily basis. Okay, what else? Decrease short liquidity reserves. So we see numbers like cost to borrow, maybe cost to borrow itself going up on GME. We see reduced GME direct shares available to borrow. We can use the IBKR numbers, the interactive brokers numbers as a proxy. If we see GME in the sort of lower around 1 million or below 1 million, GME is in a liquidity crunch. If we take a look at ETFs such as XRT, yesterday XRT got down to 0 shares available to borrow. If we see things like this, this is suggesting that short liquidity has more or less dried up, and it is under strain. It's in something of a liquidity crunch. If we have upcoming catalysts, so for example, if through our FTD timeline projections, CAT equity errors, and Rec 68 margin deferral extension window deadlines, if we have some of these coming up, that's an indication that we can expect some days where we have this external buy volume. So this is externalized or boofed, as otherwise category 2 would refer to it, right? So this is volume that should have occurred as a result of settlement much earlier in our phase, but gets kicked down the road in order to create this liquidity volatility dynamic and therefore create volatility in excess of what should occur with respect to authentic and organic buying patterns within the context of properly executed settlement procedures. Okay, so the absence of major GME swap expiries, no recent liquidity injection events, right? About 2 weeks ago, we had one of those events, but now we're largely past this. This is kind of settled out. We don't seem to have one coming up in like today or in the immediate future. They tend to cluster around earnings. Price action recently, if it tests fair value levels, if it goes below fair value or tests net asset value floor, that 2x book value that we tend to, that we've been paying attention to, that it seems to have respected quite closely over the past year, especially, right? And then technical strength versus especially bullish price momentum oscillator signals. So Roaring Kitty's price momentum oscillator is a huge asset in determining whether we are showing technical strength moving forward. So are we seeing those elements in our data? This is what I argued today, right? Looking at our data, and I'm going to structure my articles moving forward to take into account these different elements. So on a regular basis, we can have a rolling idea of what phase we're largely in with respect to these broader cycles. Now that we've been through a few of these, and some of these criteria have presented themselves in greater clarity, I think it's certainly, for me, it's helpful to kind of keep a running checklist of this going. So let's take a look now at whether we're seeing some of this. So we'll start, of course, with market context. It has been important in the past, although I will say that we sometimes have had flip dynamics with respect to the market. So usually when we see GME, when we have seen the broader market in bearish conditions, that when it corrects downward, we typically see GME correct downward with it. When the market then moves back to the upside, we largely see GME stay flat. And then somewhere down the line, as long as things stay stable, we get a price up. What we've seen in the market over the past couple, over the past couple weeks, so this week and last week, is we saw the market actually move down pretty strongly. But because of the strength, the recent strength in GameStop's balance sheet, we haven't seen GameStop move down with the broader market, but instead more or less trade sideways. And now that the market has started to move back up in this near-term recovery, we are seeing GameStop price itself up as a result. So GameStop has flipped its dynamic. Instead of moving down with the market and then staying flat as the market moves up, GameStop is instead staying flat as the market moves down and up as the market moves up for a priced up floor there. So that's very interesting to start to notice. That's usually defied our pattern over the past few years. So what are we expecting, I guess, in terms of market context? What's happening here? So yesterday, right, we did see a decent sized price up in a bit of a recovery, some retracement. What was involved here? Okay, a lot of this had to do likely with rebalancing. So a lot of margin calls went out over the weekend. So institutions significantly rebalancing their portfolios. Moving forward, we're probably still looking at bearish market contexts, right? So we could have seen some continued recovery here, potentially from this large put expiry that we saw yesterday. About a tenth of our total put gamma, that is trader long net negative gamma exposure, was expired as a result of yesterday's options expiry. So looking forward, we're probably looking still at something that is medium term to longer term bearish. We can see that moving forward in our options data. We have that context. Historically, that hasn't meant something good for GameStop, but as a result of GameStop's transformed balance sheet, we might continue to see GameStop valued as a point of stability, and as a result would also, because of the strength of its balance sheet, become more heavily weighted in ETFs that do not see it declining as strongly as other as other equities that are more greatly offended, I should say affected, not offended, but certainly offended by market downturns. So, okay, so what signs are we seeing necessarily that may suggest then that on top of this, we see GameStop going into this volatility cycle, or I should say the volatility phase, and therefore price up phase of one of these volatility and liquidity cycles. So yesterday, right, again, we started to see this. We saw major movements in implied volatility. Implied volatility is up. We do see the price moving up. This did intraday. We saw a bit of a decline as we sort of evened out, but IV certainly had moved up. It moved up again after hours, I think, to price in these 13 Fs from Larry Chang and from Ryan Cohen that occurred after hours. We do see that we have seen some recent liquidity restriction. So, right, GameStop, as I mentioned, overnight, we've been seeing GameStop get down into the sort of 500,000 range in terms of availability to borrow, and it's only more or less recovering up to slightly over 1 million into pre-market right now. So, right, if we go take a look, close to open here, what are we seeing over on Chart Exchange? Yeah, basically the same. So maintaining constant there, but right, we've seen in the liquidity cycle, the liquidity phase, I should say, of these cycles, right? What we've seen is GameStop shares available to borrow have gotten into the upper 2 millions, into the 3 millions, and actually as a result of this very interesting event that took place following this convertible bond offering, a really large expansion in available liquidity on GME for borrowing, over 4 million, which I've never seen before. But interesting to see it fluctuate so wildly here. Another interesting signal, right, is that into yesterday, we saw shares available to borrow over on XRT, which is still on the regulation show threshold securities list, get down to zero. So 0 shares available to borrow per international brokers. Richard Newton very excellently pointed out that in the span of a day, so it's from Friday to Monday, shares outstanding had been cut down from 5.2 million down to 2.35 million. We now see them coming back up. So some creation orders have come in, taking us back to about 4.8 million. What's that going to do? Okay, that does suggest a recreation of liquidity, but this is new liquidity necessarily. It has gone through a crunch here, so this may result, this large creation order, in the acquisition potentially of new shares, right? So as shares were redeemed in order to meet liquidity requirements or settlement requirements elsewhere, a significant number have now been created and may possibly result in the significant inflows for the ETF. This would this would serve as a very large, as a substantial external buying catalyst. Okay, we see daily trading volume is at just over about or just at 2 times our daily threshold, right? So our daily average. We see total options premium is about 4 times our daily average at almost $47 million spent in the options market total. Implied volatility levels, as I said, are elevated. So we see our 10-day mean implied volatility there. We can see our our Schwab total composite levels are getting up there, right? So when we start to see GME trading in terms of options pricing being anchored to an implied volatility level, a 30-day forward-looking IV level, if we see 100, when you start to see 100 pop up, or certainly greater than 100, that's a decent sign that you're entering into a higher volatility period as a benchmark for GameStop, right? Looking at around around the upper 60s or mid 60s is very, very low. That's 52-week lows. 70s are on the lower side. Definitely kind of 80s or lower or mid lower. So you're probably in a liquidity phase when you start to see that pop up, or kind of a cool off, right? And we can see this with individual weeks. So this week we're at 147, next week 129, then 134, 118, 104, 104, 101, 118, 109, 104, right? So basically, right, when you see something like that, when you see implied volatility from now all the way out to, that's October, is priced in excess of 100. So we have implied volatility values across all of those strikes in excess of 100. That's pretty high IV. So you're moving into a volatility period. And that is a direct product of our elevated volume levels, options activity, and reduced liquidity, right? So as brokers have less liquidity to rely on in order to settle trades and to facilitate trades as a result, then they will raise implied volatility levels. The options market maker brokers will raise implied volatility levels, raise options pricing in order to have a greater amount of cash on their books in order to make up for that more strained liquidity. Technicals, right? So importantly, with respect to our technicals, the most important, I would say, and seems to be the case, we do have some more stable moving averages, which operate as anchorage points in our price action throughout the day. We've seen that take place. They are more meaningful, I should say, on up cycles and in range-bound periods. They tend to be less important during liquidity phases. So we tend to respect technical levels more so during the volatility phases and less so during the liquidity phases. So what do we see taking place here? So the most important part is, I would say, the price momentum oscillator. So Roaring Kitty's been really great on his Rory Kittinger charts to point out the validity of this custom price momentum oscillator indicator that relies on a 55 simple moving average signal line to demonstrate when GameStop, which he categorizes as a momentum stock, is moving into one of these volatility phases. So if we see these moving averages clustered below the midline, the zero line, which is the nascent or the native signal line of the price momentum oscillator, when we see the principal lines of the PMO, the 20 PMO and the 35 PMO, begin to move from the bottom, right? If they've crossed the zero line, if they're below the zero line, if we see the 55 SMA below the zero line, and then we see the PMO lines, the 35 and the 20, start to move to go ahead and cross that 55 simple moving average back toward the zero line. When they cross both that signal line and the zero line, those are very, very strong bullish signals that indicate increased volume, likely increased volume, and an upcoming price up. The inverse is true. So we saw that, for example, back during the beginning of our liquidity phase that took place. When that occurred, it seems to be that Roaring Kitty, that's right around the time that he put out his January 22nd tweet, I will wait for you, which marked that bearish cross of the same indicator. Now we see we're getting really, really close to that cross. In fact, if you go ahead and look at his charts, today is the day that they are crossing. If you look at his values there over on TradingView, which I use to map this, right? We're not quite there. So if we pop over, we're getting there. Actually, as of today, as of right now on TradingView, we have officially crossed. So there it is, folks, live. That is a cross. That is a bullish cross of the signal line on the PMO. So looks like we may have a little bit of a deflection here off of our 50-day moving average. We'll see what that means going forward. It's right at around, it's just south of 25. We also have a call wall there, which is operating as a resistance level as a result of market maker gamma hedging. But we do have this cross. So what does that mean? Well, certainly this first cross projects bullishness into the next couple of weeks. So the last time we got one of these, scroll back over here, right? That is the beginning right here. Boom, we got a really big up move. We got a really big up move, similar size up move right here, similar size up move just before we began the last of our volatility phases in one of these cycles. So, right, here's a great visual. In fact, this visual is very excellent. This most recent cycle we went through is extremely powerful. Even more so, it's a little easier to discern versus the one that we got last April and May, right? So because we had so many changes in the midst of this to our net asset value floor, it was sort of difficult to discern exactly how far we were going to come down. Why did we move this high, right? There were a lot of other dynamics involved here that had to do with Roaring Kitty's trades themselves, as well as his return, right? Some retail buying took place in here. So difficult if you weren't familiar, right, to actually figure out, okay, what's going on here. This pattern, right, this pattern that we just saw play out is more discernible, as I've pointed out, if you go by the closing prices of these candles. So if you sort of stick to this lower shape without the, I think I called it barbecue sauce, the salt and vinegar up here from Roaring Kitty's post. So this is his X return. Then this is his Reddit and or Superstonk return. So if you stick with the closing prices, you can see the volatility pattern. So the volatility phase and then the liquidity phase here play out. And then, right, we traded a little bit sideways, and then right around here, volatility phase, liquidity phase. So volatility phase right up in here, and last hurrah, double top liquidity phase. Liquidity, and volatility phase begins again. Flatten out a little bit, volatility phase, and double top, liquidity phase. We get a little earnings here. Stutter around the bottom a little bit here, and now just like we got here, and it's time to start moving back to the upside. So right, we see the signs here, we get the cross. So this is not right, this projects we are going to move now. We got it back here too, right here, right back when Roaring Kitty, just before this happened, before he went public, we got the cross before he let out his stuff. So here we go, momentum cross, PMO cross, here it is. Almost got it here. But then wait until the really perfect moment, and we are ready to start really chugging back to the upside here. So this first cross, based on how long this took, these take about maybe in 6 to 8 weeks. I mean, this is a 10-week cycle, right? Between weeks 8 and 10, we get the double top. Yeah, something like that. So here we have, this is our daily. So we can actually visualize the weeks here a little bit better. We head on down, right? So we can see it here. So here we go. Here's volatility phase 1, 2, 3, 4, 5, 6, 7, 8, 9, right? So about 8 weeks up. Then we kind of had our last hurrah. Yeah, so we get about 8 weeks up. So 1, 2, 3, 4, 5, 6, 7, 8. Yeah, we actually had exactly 8 weeks of higher closes. 8 weeks of higher closes, and then we get a 1, 2, 3, 4, right? 1, 2, 3, 4, 5. Kind of 5 hang out at the top. Then we get 2 weeks. We don't get higher closes, and then we move down. So then, right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right, so just around here, and then we hang out for a couple weeks and then move back up. So right, it's about eight weeks up. We get maybe a couple weeks to stagger there, because here again we have 1, 2, 3, 4, 5, 6, 7, 8, 9 this time. Then 1, 2 weeks of kind of hanging out. And then 1, 2, 3, 4, 5, 6, 7, 8, 9. And that's where we bottom right there, right? So about 8 to 10 weeks up, about 8 to 10 weeks down, plus or minus 2 kind of as bookends or as kind of staggering in the middle there. So at least 6, really at least kind of 7, maybe even at least 8. But certainly no more, I think, than 10 before we really move down to the downside. So we've really started to move here, got our first 2 weeks, right? So this will be week 2 of now starting to move to the upside. So man, we've got about 6, maybe a little bit more. So not including this week, so 6 to 7 weeks, we should be pricing up here into the rest of April and into most of May, maybe, and then kind of early June, those couple first weeks into June. Of course, this is contingent on whether or not Ryan Cohen is going to deploy another offering here in the midst of this to take advantage of this volatility. We don't know. And we don't know the degree to which that's going to invite more bond arbitrage shorting that might kind of disrupt a bit of this. We'll have to see. But in any case, we are looking pretty good at one of those crosses. Now, yeah, that should project here, just like we got back here. We're looking at about 6 to 8 weeks of moving up. 6 to 8 weeks of moving up. Yeah, there we go. Very awesome indicator there. Okay, so what's that going to look like then? What is that looking like in terms of our options? Like how is the options market playing this? Well, certainly in the short term, they're playing this very bullish. We did have some long puts opened down at 22, but by and large, we do see call trades. So these are mostly long calls. These are mostly at the ask. So these are mostly bullish trades. We do have some short call, decent sized short call trades in here. It's biased towards the ask, and it's biased towards the 25 to 30 bracket here. So we're not trading calls in here. Traders are saying, okay, think this is going to go higher. We're going to insert long calls up at these positions. So, right, we usually get a lot at 30. We do have a lot more at 30, but certainly seeing 28, 27, 26, seeing this area midweek, where I suppose it's early week, so Monday, right? Seeing this populate with long calls, certainly in the short term. These are short-term bullish bets. These suggest we're going to move up essentially now, right? This is betting on bullish price action toward midweek. Okay, going forward, we did not really, April 17th, we don't see too much. We did see actually a trade to close, a decent sized put trade to close. So, or excuse me, short call trade. Somebody took over 1,000 calls off the board that they had previously sold short, thinking that 22, that's not going to work out for us next week. So traders are certainly reading the writing on the wall here. Max Payne has moved up. This is a bullish signal from 22.50 to 23. Very good. If we look at our gamma exposure, what does that tell us about market maker hedging, gamma hedging dynamics intraday? Well, yesterday, right, if we looked at our price action, we could see that we kind of settled in here. So we moved up, shot up through this position, first kind of hung out, retraced a little bit, bounced off our call wall, and then we hung out in this range, right? We traded in this range, in this little pocket. That's what we want to see if we're approaching a call wall. So generally bullish, generally something that projects that we have a good opportunity to move past a call wall, to get a call wall breach, which does not happen most of the time, is what I've referred to as a stenotic effect. So stenosis, kind of a tightening, because it's like an inflamed tightening, but a tightening from stene, Greek, tight or restricted. So right, what we see here is this bouncing around in this level, right? Our price kind of honed in on here, and we still kind of see that off the open today. Right, yeah, we're still in this kind of mid 24 area here. Yeah, we've already got a low. We bounced down to maybe about 24, 20, but we're still in this area. So while we stay tight there, if we do have something like an FTD closing event taking place, right? Something that, or perhaps, right, as a result of these creation orders in XRT, if somebody's got to go out and buy a bunch of shares of GME to fill up these units of XRT, and that occurs, that can be a strong external buying pressure. So that's the type of event that I talk about when I mean external buying pressure. That can come in, that can then overcome, right? So we typically need an event of that magnitude to come in and move us past hedging, since the force of hedging here at this call wall is particularly strong. We saw that play out during yesterday's trading dynamics. Twice we really bounced hard, right? Even early where we had a ton of volume come in, that volume just got countered very hard. So if we can go take a look at this, right? Bump back up to our review of price action yesterday, right? So right here, right? I mean, intraday, right? We just kind of got there, got up to 25, and then the price just stuck and it didn't move for maybe about 2 to 3 minutes. We just hung out there, and then, okay, options volume came in and took us back down. I think SPY took us down a little bit too. So, right, that's all that buy pressure is coming on. SPY's still moving up, but GME's not. What's going on there, even though it's trading in sympathy with it, what's happening? We're getting this external buy pressure, not enough to overcome just how strong that counter hedging force is from market maker options gamma exposure hedging. So what's going to get us over there? Well, on the one hand, we're starting out the day much, much closer to that level. So that's why that stenotic closing of the gap between our intraday support and that $25 overhead is important. So if we do see that take place, we do get some external buying pressure come in for whatever reason, that can catapult us, or it can kick us over here. And then now we do have an expansion of net call GEX at these strikes, basically up through, right into this kind of 27 to 28 area. So if we move up here, we probably get, I don't know, maybe stuck around here. We have a technical level there at around 27.50. So there'd be enough GEX here to catch us. There'd probably be an options dog pile there, right? So we do see this sort of phenomenon on options dog pile. Whenever we get one of these breakthroughs, that's going to be a big signal for an options dog pile. If we get some external buy pressure, that can get us caught in here kind of midweek. We trade in this range midweek, and then toward the end of the week, kind of settle as close to this level as possible. We probably see Max Payne move up a decent amount. Yeah, if we could still move up through this level, if we get a really super heavy options day today, we could get moved through this level. But it's likely that by the end of the week, the force of charm would probably move us back down here. There is enough liquidity to use some tactical shorting to kind of get us under this level again. Options market maker would be very happy for us to expire with this entire position out of the money and worthless. So if we do get an external catalyst today or tomorrow or something like that, and we kind of hang out in this region, yeah, we can move over that call wall, and then it would project. There'd probably be something like an options dog pile to take us higher into that, and maybe up toward 27 midweek. But if we don't, we can move up above there. We can get a bullish options day high volume that takes us over that level. But I'd be hesitant to think that options alone is going to take us through a call wall. And keep us over there into the weekly expiry. So that's basically how I'm seeing that there. So yeah, I mean, really, we have a lot of good signs here. We have a lot of good indicators. I mean, these criteria, man, this is kind of as bullish as it gets. We do see, right, we are seeing some of this XRT creation, but it's still on the threshold security list. Yeah, open question. Good to keep an eye on that. Is that going to become a source of liquidity to kind of keep the stock down? What's the relationship to some of these potential catalysts, such as FTD clearing or these equity cat error deadlines, potential margin call extension deferrals? What really is the nature of those catalysts? Are they going to happen? Aren't they? Can we see that in the ETFs? Yeah, those are good questions, right? So if I had a question mark, something I wanted to keep my thumb on, potentially, right? What about Chewy swaps? That's another sort of open question we've talked about. Those are kind of the two big question marks. Can we read that? Is there some data source that can give us a little bit better, a little bit clearer of a picture as to what that process looks like, as far as how fast or how dynamic we kind of move up the price chain here, what that means for how high we might go. Certainly good to have something like Morningstar. Yeah, Morningstar upgrading our fair value rating to something like 2350 or something of the like. So yeah, very interesting to see that going on. Lots of bullish signals. Love seeing this PMO. Love seeing what we're seeing. Yeah, options data looks good too. So we'll have to see what happens. Certainly a lot to keep an eye on. And yeah, going forward, looking forward to keeping a much clearer and sort of more purposefully articulated and structured track of these particular criteria as we evaluate the unfolding of these cycles going forward. So yeah, let's go GME. A lot of reasons to be excited. We'll see you guys then to discuss our next breakdown tomorrow and how this trend unfolds. Before in the morning. So see you guys for another open interest breakdown tomorrow. Thank you very much, and see you then.